We compared two job offers on gross salary. The first one paid more on paper. We picked it. Then the first real payslip landed, and the gap between the two offers was much smaller than the headline numbers suggested. The gross number on a job offer is not what arrives in your account. After income tax, Medicare levy, and sometimes the Medicare Levy Surcharge, a bigger headline salary can mean a surprisingly small real-world difference when two offers sit close together. By the end, you will know how Australian tax is layered, which three things regular employees can do to legally keep more, and one threshold most Australians are using the wrong figure for this year. Australian income tax does not apply one flat rate to your whole salary. It works in slices. The first slice up to $18,200 is tax-free. The next slice is taxed at 16%. The middle bracket is 30%. Then 37, then 45 at the top. When people say they are in the 30% bracket, they mean their next dollar is taxed at 30%, not that everything is taxed at 30%. Your effective rate, the real share of total income paid as tax, is always lower than your top bracket. On $80,000 taxable income, income tax comes to around $15,500. Add 2% Medicare levy. Before offsets, your effective rate is under 22%, even though your marginal rate on the next dollar is 32. The Medicare levy is simpler than the brackets. Most residents pay 2% on taxable income. It sits on top of income tax and applies to the whole taxable income above the shade-in threshold, not just the top slice. The Medicare Levy Surcharge is different. It applies only if you do not have appropriate private hospital cover and your income for MLS purposes crosses a threshold. The surcharge adds 1.25 or 1.5% on top of the regular levy. This is where a lot of content is still using the wrong number. For 2025-26, the base tier for singles is $101,000. Older pieces still quote $93,000 from 2023-24 or $97,000 from the year before. If you're planning this year, use the current threshold. The surcharge applies to your full income for MLS purposes once you cross the threshold, not just the amount over it. Crossing $101,000 by a small amount without hospital cover means paying the surcharge on everything. Here is a catch that surprises people near the threshold. Income for MLS purposes is not identical to the taxable income on your payslip. It can include reportable fringe benefits and reportable employer super contributions. If your employer adds benefits to your package, your MLS income may be higher than expected. Here is a question worth sitting with. Have you checked your income for MLS purposes recently, or are you planning around the taxable income figure on your payslip? For a regular salaried employee doing their own tax, three levers are worth understanding. Salary sacrifice to super work-from-home deductions and running the hospital cover calculation before the surcharge catches you. If your taxable income is above $135,000, your marginal rate is 37% plus Medicare. Salary sacrificed into super is taxed at 15% inside the fund. That gap is real. You give up access to that money until you meet a condition of release. That is the real trade-off. For higher earners who can afford to lock it away, the tax saving on each sacrificed dollar makes the maths attractive, but the lock-in is real. The concessional contributions cap for 2025-26 is $30,000. That cap includes your employer's compulsory super contributions. If your employer already puts in 12% of ordinary earnings, you have less room to sacrifice than the cap number alone suggests. Check what your employer is contributing first. Work-from-home deductions are available for employees with genuine additional running costs. The fixed-rate method for 2024-25 is 70 cents per documented work hour. Before using any figure from an old article, confirm the rate for the income year you are actually lodging on the ATO fixed-rate method page. The fixed rate method only works with contemporaneous records. You cannot reconstruct hours from memory at tax time. If you worked from home through the year and kept no log, the actual cost method may still be available, but it requires more calculation. Hospital cover does not have to be a lifestyle choice. For incomes near the MLS threshold, it is a calculation. If the cost of basic hospital cover for the year is less than the surcharge on your income for MLS purposes, the cover pays for itself before you use it once. For families, the MLS base threshold is $202,000 combined income for MLS purposes, with an additional $1,500 per dependent child after the first. Dual-income households sometimes assume each individual salary is the test. It is the combined figure for families. A pay rise that pushes you from $130,000 to $145,000 lands in the 37% bracket plus Medicare. If you also cross the MLS threshold without hospital cover in the same year, the effective cost of that raise gets heavier. The number on the offer letter and the number in your account are not the same conversation. If your taxable income is below around $67,000, the low income tax offset can reduce what you owe. You do not claim it separately, the ATO applies it automatically when you lodge. The maximum offset is $700 for incomes at $37,500 or below. It phases out by around $67,000. For most salaried employees with one employer, a straightforward year, and no complex deductions, the ATO reconciles LITO and standard adjustments when you lodge. The process is not as complicated as it sounds for simple situations. Complexity rises quickly with a second job, investment income, rental property, or a spouse whose income changes your MLS picture. If your situation involves more than one employer, it is worth checking whether withholding across each income stream adds up correctly through the year, not just at lodgement. The most useful habit at any income level is simple. Check 3 numbers on every payslip: gross pay, tax, and super contribution. If gross went up but net did not, check whether withholding adjusted for a HECS change, Medicare variation, or a prior year debt, not just bracket movement. When comparing 2 job offers, run a rough net estimate for each before deciding. Gross salary is the headline. Net cash flow is the story. 2 offers that look different on paper can land much closer together after tax, Medicare, and any MLS exposure, especially when one sits near a threshold. Before lodging this year, 3 checks are worth doing. Confirm you are using 2025-26 figures, not last year's thresholds. Add up employer super contributions before calculating how much you can still sacrifice. And run the hospital cover comparison if your income for MLS purposes is close to $101,000 for singles or $202,000 for families. The Australian tax system is layered, and each layer has its own logic. You may not be able to change your bracket, but knowing which numbers drive your take-home is the useful starting point. A better comparison of any job offer, raise, or deduction starts with the number that lands in your account, not the one on the offer letter.